Hey traders, what's going on? Jamie Saettele here. It is June 1st, 2016, and as we hit a new month, it's always fun to see the monthly scans. So, for example, you can see J spikes on a monthly basis, and we got one in dollar yen. We also got one in dollar SEK, and then in gold. The gold ones would have been bearish ones, obviously. And dollar yen and dollar SEK would have been bullish reversals. So, for example, we want to take a look here at dollar yen chart. So these would be the J spikes on a dollar yen basis. Don't get too many of them, obviously. It's a monthly chart. I wouldn't say you can get some pretty bad signals. You can get some really good signals, like the last one we had. It's actually the all-time low, October of 2011. But even then, the market didn't even break that high for 4 months. So this is obviously that's a monthly chart, so it's not like a trading signal necessarily, right? But dollar SEK, it's a little piece of information. Yeah, you can see you've only had 4 of them going back. Well, the data doesn't go back that far on this platform for dollar SEK anyway. Even the one in April, which was a high, I mean, if you would have sold there, it'd still be flat. The market hasn't gone anywhere. So interesting just to note that, you got those 2 reversals. The dollar yen one's interesting because of the really long-term support. All right, but let's get into the charts. So US dollar, let's start with US dollar, the index. It's been a grind higher really for the last 3 weeks, right? And the spot, if you look at price action going back to March of 2015, I mean, you could be building a big top. There's a lot of things that could be happening. I actually think that the answer, so to speak, in this macro environment probably comes from gold. And we'll look at that a little bit later after I go through the FX stuff. But the level that I'm really concentrating on in this index in particular, you retrace half, okay, the decline from the late January high, 50% retracement. You can see 11,990, but that's really all that's there. A little higher would get you into the long-term median line, okay, and that would be in line with some big moving averages, like 200-day average, for example, which is 12,035 right now. And then you've got former support down here at 12,040. If it happens towards the middle of the month, you've got resistance from the 618 and intersecting that median line. Okay, and that would be a little higher at 12,064. So, from here, if you go to a 240-minute chart, for example, I think that your best bet on kind of following this would be this right here. Right? You can see it's not super bullish channel by any means. I mean, it's relatively flat, but you are forming that channel, basically from mid-May price action. Nice touch points. And this support line, which would go off of the 517 low, along with the 526 low, I think that you get a break of that, and it would be, fine to be bearish the dollar, generally speaking. But in the interim, focus is probably towards that area I mentioned, 12,040, 65 before the the bigger move to the downside could begin, or at least try to begin. So that's what we're looking at with that. See where a parallel off this high would actually come in. This high here actually would come in not for a while. So we won't even look at that at this point. So that's the thinking with the dollar, okay? Current no man's land would need to break the support that you've got going on here in order to even give, a near-term reprieve on the downside for the dollar before it could try to reassert and get to resistance in 12,040.60 area. All right, now one of the components, of course, of this index, the euro, and I have us, as you know from the long-term page, which hasn't really been updated. This was not updated this prior weekend, but for the purposes of the euro, it doesn't really need to be, because we're kind of at big support, okay, more or less now. I mean, you could say, the low so far is 110.97, so that's 111. But we could, sneak a little lower. Again, ECB's tomorrow, and 110.70 is the trend line here. All right, as you can see, the 200 day's already been touched. We've rallied off of it. Haven't really heard many people talking about that yet, about the 200 day, but we have rallied from that level. The retracements, 61.8 is actually 110, or sorry, 50% is 110.77, excuse me. And that's actually in line basically tomorrow, which is, kind of where the order is, still at 110.70. It's hoping to get triggered today, and you get, a reversal bar or something like that to the upside into ECB. But ECB's tomorrow, and, I was actually just talking with Mike about this, and, ECB, let's see, this was December 3rd ECB. Okay, what happened? You spiked to a new low, and the market went berserk on the upside. If you remember, that was, we had a 500-point rally basically that day. March, we were actually long euro into this, and then we were stopped out at about, I think, break even at that point, and we went down to a new low, and the market then ripped again from 108.30 up to about 112, so some 400 points. The May ECB, nothing really happened. The June ECB again, which is tomorrow, if recent history is some sort of a guide, and with the support line looking slightly lower, again about 110.70, would not be all that surprised to see the market try to take out the lows on ECB and then again rip higher, right? And actually, this is the chart from last night, so this is a little cleaner, not much crap on it. But as you can see, generally speaking, 110.50 to 111 from 2015, since basically 2015 started, I mean, 110.50, 111 has really been, an inflection zone for some time. So, it's right there tomorrow. The trend line is 110.70, which is right smack dab in the middle of this zone, right? So that's a spot to watch, a level that I really would like to buy the euro, to be honest. I mean, like to buy the euro. I think, look, it's possible that that's the start of the next leg up within an uptrend that is going a lot higher. but I would expect trouble up around 1370, 114. And this is actually interesting to look at when, I kind of like to do this sometimes. It's kind of like getting ahead of yourself, but I like to do it anyway. So if you were to draw, let's say that you bottom at 110.70 or so. That's just for argument's sake. Say you bottom at 110.70. The 61.8 of that move down would actually be 114.05, right? And that's cool because 114.03 is actually weekly reversal support, right? Weekly reversal support, again, just the close of that week. So the close of the week of 5/6 is 114.02, excuse me, not 03, but you get the idea. And you've just got longer term resistance up there anyway. So that's why the target for any sort of long in euro would be 114. All right. And then basically a move, stops under 110. So, I'm just kind of treating this as if the market were to come under 110, that would kind of, that would be enough to say, well, it's probably completely wrong, and we're going to 108.70 at that point, which is the year open price. So that's euro. Big day tomorrow. ECB, NFPs on Friday, ECB tomorrow, and looking for basically that final washout low before this market tries to go a lot higher. And we've had 4 weeks down in a row here too, right into support. All right, so that's it. I mean, on a shorter term basis, euro, shorter term basis, all right, down here's where we're looking. Shorter term basis, 112, the lows down here, could provide resistance in the 112.14, 112.30 area. You could get, some resistance right there. And then, 113.40, which is this high. And then, kind of series of spikes into that level. And then, of course, it was resistance. We actually sold here, if you remember, back in May, a couple weeks ago. That would actually be, potential resistance. But the bigger resistance, especially with the big event risk on tap, the next couple of days is 114. Okay. So those are your two levels, I think, to really pay attention to, 110.70 and 114. All right. Cable. Well, Brexit poll really screwed that up, didn't it? Now, we still actually have this slope working, it seems. And the chart from last night, this is pretty much the chart from last night, but a couple interesting things to note here. So, well, you're at support right now, basically 144, right? Tweeted that a few times today. You just got a little hourly reversal going on here. Let's see. Got anything interesting on the indicator front? Not so much. Anyway, you do have, again, support here at 144. Okay, we slipped to 143.85 last hour and have, come back with a nice hourly reversal. So I'm looking higher right here. I mean, on a really short-term basis, basically against 143.85, which is was probably a little bit of a stop run right there below the 144 area. So I'm looking higher from here, basically just back into 145 or so. All right, 144.86, 145. You can see actually there's a wave count that if this is going to make 3 waves down from the 5-3 high, that's assuming that we're still the pound still has something in it on the upside, like the pound. If pound's still bullish, okay. Well, one, you'd want to obviously see this hold, right? But 143.02 is actually the 50% retracement of the entire rally, okay, going back to the very late February low. All right, so just the midpoint of the range that you've had for most of this year. Okay, failed at the year open price here. These last few rallies. This was just yesterday, so it was looking quite different for a time until the Brexit poll came out right here. But we've got two equal legs as well. Would also be, guess where? 143.01, like literally the exact same price. So if you're going to make it down there, you can see kind of a 1, 2, right? 1, 2, 3, 4, 5. That would be wave 3. And then if if this is a little fourth wave action that's going to unfold from here, from 144, right? You could get back up into 145. So really a couple of options here. You could try to buy it here, okay? Problem is if you buy it here, you're going into, based on this, you're going into a corrective phase, right, with wave 4. So that means, wave 4 could be several things. It probably would end up as a triangle, a triangle or a flat. In which case, you're going to go kind of sideways for a little bit. So we'll see. But, the initial leg here, you could get a little thrust higher here into 145. Bottom line is basically trading levels for pound appear to be about 144, 145, and 143. Okay, so for me, I think there's probably two trades in this. Basically look to sell into 145. Okay. Would have stops above 145.55, which is actually the high volume level from the Brexit poll. That's the hourly bar yesterday, the 10 a.m. hourly bar here. Okay, so I would be looking at a short into 145, and then to take that down to 143. So talking about 200 points there of potential. With if let's say you put the stop at 45, 75 or something. So you're saying, 75 points on the of risk, 200 on the reward side, and then would actually look to turn bullish down here on 143. Okay, so the pound pattern for all the insanity that's gone on here, it actually looks, the pattern itself is actually fairly clear in terms of wave structure. Okay, and levels, which is the two best combinations, right? So you've got a clean wave structure, you've got clean levels going on. Okay, so basically looking maybe A, B, C, but trading wise, resistance right here. And then support down here at some point. So that's what we'd be looking at. All right, so that's pound. Moving on, let's look at dollar Swiss real quickly. Dollar Swiss is actually coming to resistance itself. We have a wedge breakout here, right? So the wedge breakout actually is pretty bullish, and you'd be looking for resistance, not really until up here, which is the November high. But the wedge breakout, oftentimes it's best to get a retest. So on this, you would actually have a retest Weekly reversal support is 97.24, and you intersect the slope confluence for that next week, late next week. So we might find ourselves down here for dollar Swiss late next week, near 97.25 or so. That would be at which point you might actually look to buy dollar Swiss. So, that would obviously imply a weaker dollar until then, and a stronger euro, which is what we're looking for anyway, although we're looking to buy euro after a spike low on ECB. You could get something similar, of course, with dollar Swiss if you get a spike up here and then it collapses or whatever, or you get the divergence where dollar Swiss stays below the low or below its high, euro dollar spikes in the high, etc., or into the low, and you get the divergence between the two pairs, and the market then reverses. But either way, I'd have this level highlighted as far as 97.24 going into next week. Dollar yen absolutely annihilated overnight. Tweeted out the support at 109 this morning. Low is 109.05. I do think at this point you probably end up getting back into 107.60, 107.80. Okay, and before there's potential for a bigger low. I guess this could be a low, but just because you have this form of resistance, now it's a breakout level, and now it just became support. But the near-term momentum on this is such, it's more consistent with, like the beginning, of a drop, like the hourly RSI here, right? Really extreme. A lot of times you get those towards, the earlier stage of a move lower rather than the very end of a move lower. But it is dollar yen, so, we'll see how it reacts around 110. The high volume level in this market from last night is actually 109.95. Resistance could be a little bit higher. You're basically looking at this support line, former support line, touches a lot of stuff here, right? And that would basically be an area to watch for resistance. If that was overcome, then you might actually look at being positive on dollar yen again. Apparently this huge dollar yen drop was blamed on some sort of comments coming out of Japan. The Nikkei tanked, dollar yen obviously tanked. It's probably exacerbated by people like me playing the breakout to the upside, right? And then just getting a whole wash of stops on it. But either way, would be watching now for resistance again around 110 or so. Okay, basically this former support right here. Okay, watch for resistance there. Now if we actually end up with just want to look at a naked chart. It's not hard to envision especially since you just had, as I showed very early on in the webinar, it's not difficult to envision a something actually really, really bullish, like more bullish coming out of this, which is always the ironic part, right? You get a move like this to the downside, but it's not difficult to imagine something more bullish happening because of it, right? So, okay, here was the support, that's fine. But you can see you could get something along the lines of like an inverse head and shoulders pattern, right? And, oftentimes, as we know, left shoulder, right shoulder, more or less in line with each other. So, that puts you at 107.60s. okay? And the 61.8 of the move is a little higher. It's 107.80, I believe. Yeah, it is 107.80, but you get the idea, okay? And then let's just say, for argument's sake, again, doing what we did earlier, that you end up getting a move up into 110 from here, or thereabouts, which is the area we're looking for resistance. Why? Because it's the former support line, right? Support, 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 support. Now watch for resistance. It's right at 110. You get resistance there. You can end up having two equal legs down at 107.60, which is that level there. Boom, 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 right? So for me, I go into trading levels on dollar yen, basically looking at 110 as a trading level, 109, which we just bounced from, and 107.60. Okay, so no problem switching, maybe wanting to short 110 actually, right, into this, and then get you down to 107.60. And when you are looking at dollar yen, I do think it's always a good idea to take a look at the Nikkei Index, and let's see what we got there. Okay, so here's the 4-hour chart, and this is going back to the high again from last year. Okay, and I'll look at a few things here on this. Okay. Again, really long term, you've actually tested the underside of a trend line that goes back to 1996. Okay, so there's certainly potential for something crazy to happen on the upside at Japanese stocks and the dollar yen. Going back to the short-term chart, which is obviously a little more valid for us at this point, this is the trend line that seems to kind of define the slope that's going on with the Nikkei Index, right? And then the parallel that we extended off of this one on 224 low was resistance, resistance, and was support, okay, throughout May. Well, that's lower, okay, that's closer to 16,500 or so, which is in 300 points, okay, 300-point drop in the Nikkei is not all that much. In fact, it's down today 270 points. Okay, so maybe that 300-point drop in the Nikkei down to that support 16,500, maybe that gets you into 107.60 for for a rip. Okay, something that I think we should watch for moving forward. As you can see, getting a nice continued bounce here in pound, right? Looking to that 145 area. Okay, so it's dollar yen. Let's go to the commodity currencies now. Take a look at Aussie. So Aussie dollar, have been thinking that we've been bottoming for a while. We might have something to trade with on the long side at this point. Okay, I'll get rid of the moving average. All right, so the lower parallels 2 trading days ago just about hit, right? Low is 71.48. I'm looking higher here again till at least this region, which is 74.01. Okay, and the reason for that is that's the origin of the wedge. So wrote something about Aussie last week, basically describing, a 13 wave pattern, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So the implication being that 13 is actually an impulse, okay? It's extended, basically get 2 waves extended on that one. So 5 would be a 5-wave move down, 9 would be 5 with 1 extension, 13 would be with 2 extensions, 17 would be with 3 extensions, okay? So I don't really care which one's extended. I just like to know the number of waves. And in this case, you can see that from wave point 8 is when you've got 1, 2, 3, 4, 5, and that actually gives you the diagonal. So the market should be headed back to that point at 74.01. And as you can see now, we actually have formed some sort of a bullish, it does seem like we formed a bullish short-term behavior on this chart. You can probably take it out of gray because it actually is, you're adhering to this, right? Former resistance here, support, we're kind of finding support around this area. I think you've got 2 equal legs down from the high here as well. Just about a pip shy, 72.26. And the low here is 72.27. So, Aussie's constructive. Again, you could still get down here. I'm not saying that you can't, go down to 72. Just saying that it's nice to see the market trading on these levels, right? That means that you might actually have something to work with rather than, because anyone can draw anything on a chart, right? You don't know if what you're looking at has any validity whatsoever until the market starts actually trading on these lines, right? So that's, a positive, at least as far as I'm concerned, for Aussie dollar. And looking for a long entry. So let's see how the day finishes here. Big proponent of kind of waiting for the information to present itself, before putting in, an order, simply because with all the HFT shit that goes on these days in the market, spikes all over the place on an intraday basis, and you really don't know, what the final, vote is, if you will, until the end of the day, right? So you've got beige book coming up in 30 minutes too. So for all I know, this thing could go up here and then down. I mean, it can go all over the place. I mean, there was a rumor today that there's going to be an output freeze. For example, crude oil, and this rumor seems to come out like every other week. But crude oil rallied like over 2% on it in like 30 minutes. I mean, it's crazy. So that's, what's what we got to deal with. But if we finish the market, if we finish up here, yeah, sure, there's an opportunity to buy Aussie, on any early weakness. I think on Thursday. You need stops down here though, so we'll see. Kiwi's actually a little cleaner. Was thinking that Kiwi was about to accelerate to the downside. After it had continually failed to rally. Obviously, that did not happen, and Kiwi's turned around sharply, stopping us or trailing us out of the short position. Okay, what we've got here. Actually, this is interesting. So I actually think that there is a Kiwi short position in the horizon again. Okay, but it might be up here. Remember this? This is the trend line. Okay, very clean. Some retest action. This is the slope that I hadn't really previously thought to look at, but the fact that we reversed off the 50 line here just a few days ago tells me that maybe it's worth considering. So I'd look for resistance. One, you're at the year open price. That's what this is. Okay, so I'd look at resistance basically at 68.47. Noted last night that that's where you would get, a you know, a retracement of the wedge. Okay, there is an Elliott wave count that would call for this to be treated as basically 1, 2, 3, 4, 5. It's ugly, but it's valid. And guess what? You get 61.8 retracement at 69.09. You have a confluence a little higher around 69.20s. That happens to be around the 9th, again, late next week. So from here, you know, resistance about 68.47. A couple areas to look for support. With the best one probably being about 67.60 at this point, okay? You know, I wouldn't rule out something down into, you know, the lower boundary down here, but combination of median line, 50 line, and simply the horizontal level, the 67.60. Remember, 67.60 is been huge. I mean, it was support back in early April. You know, it was support back in mid-May. The general area, we opened there 2 weeks in a row. It was resistance towards the end of May into the, you know, into the low. So I'd be looking at 67.60 now as support to get long for a move up into 69.10, 69.20. Okay, and at that point, I'd actually want to short again. So as you can see, a lot of range stuff going on here. Really not much trend at all in the market at this point, save for kind of the euro slipping lower over the last 4 weeks. But even then, that can be wiped out on one word that Draghi says, and I have a feeling it probably will be. So yeah, that's where we're looking that's where I'm looking as far as trading levels are concerned for Kiwi. Okay, and this is another thing too. You know, this new fork that you can draw right here, right? You can draw it here off the low, high, low. It's the same slope as the trend line. It goes back. Okay, so it just kind of reinforces the idea that that's the right slope to watch. It's probably unsightly though, messy on the eyes. Anyway, that's where I'd be looking to trade Kiwi. Okay, what about dollar CAD? Really no change here. Dollar CAD, I think it gets to 133, 133.20 over the next few days, but whether or not it's going to hold above 130, I just don't know. You know, it was, I guess, somewhat disheartening to see crude oil coming off so hard from such long-term resistance. And then dollar CAD continues to fail at 131.21, which is daily reversal resistance. So you could still get, support lower, down here. I mean, you could get support down near 29.76 is actually daily reversal support. So you could get support down there before this thing heads higher. Worth considering, if you want to alter the mechanics of the position or whatever. I like basically as long as price is above 129.10, I think price is going to 133, 133.25. Just as a general rule, the market did, we've turned up and we had a 5-wave rally and we dipped. So, turned up again. So as I noted last night in the update, I'm moving the stop is back to 130 simply because a move back below there would leave this as 3 waves up and put the market, at least the way that I look at it, at risk of a move back to 129.10. But based purely on levels, trend lines, and whatnot, I like it higher to 133, 133.25. Okay, so we'll see what Beige Book and all this other stuff wants to do. But that's dollar CAD. Those are all the majors, but take a look at some crosses. Pound yen to actually come into support. Noted last night, the 157.50 area, I believe. It's a 618 of the move up from 153.60, and you actually we came into that and we've bounced. Again, the momentum here, as well as considerations of well, dollar yen specifically, but dollar yen gets up to 110, you're going to get a nice pop here, okay? But it might be one of those things where actually at this point you'd want to fade it. Could still have a broad bottom going on here with pound yen. In fact, probably do, considering both the pound dollar and dollar yen analysis. They're more or less moving together. So I would trade both pound dollar and dollar yen at different points. Trading pound yen right now, it's kind of trading pound dollar on steroids, right? But from here, I would be looking for continued bounce as per both the pound dollar and dollar yen analysis. Would start to think about getting out of that scalp at 59.20 and even 160, at which point it would be vulnerable potentially once more. But this is your support, okay? Still just 3 waves off the lows, 5-minute chart. So pound CAD is an interesting one. I put this chart up a little earlier as well. One sec here. Pound CAD. Okay, so we did hold support for a little bit on this. Remember, this was the former channel resistance. We put this out on a lot of different posts, and that did hold for a while. In fact, there were a lot of little scalps off this you could have taken, but it did crack, and once it cracked, you don't want to be involved on the long side. After a market holds that for that many times, it really goes. I'd be watching for 187.70 support though, for a long, okay? And I'd look to take that up to 95.55. So based on the analysis of pound dollar and dollar CAD, my guess is that most of this would be dollar CAD. But of course, unless this completely falls apart, all right. But yeah, watch for support right here. It basically looks like about 87.70, and it's just a trend line, okay. Real simple stuff here. It's just the trend line, but that trend line, that slope has a lot of trading on it. This resistance, support, even this parallel from here, okay, extended, from the high on what's that, about the 19th. That was actually the high, and very precisely the high on the 25th, okay, and you would actually get that intersection here on June 10th too. So I'm watching that 87.70 area. Might be worth actually putting an order in to buy it if you get some sort of a rebound at that level. It's probably one of my favorite looking crosses at this point is that pound CAD piece. Let's look at gold. As mentioned earlier, the implications here fairly significant, I think. If the dollar is topping, broadly topping, like not saying it's going to crash tomorrow, but I mean, if the dollar's trying to put in some sort of a topping pattern, then the gold chart okay, this is a chart that you should be pretty familiar with. The median line, the long-term median line going all the way back, right? That comes in as support it's a little lower than 1180. It's like 1180 this week. So that would be a pretty big drop for the rest of the week, but it's certainly possible given the fact that you've got NFPs and ECB. But it would be about 1180, okay? And obviously it decreases a little bit each each week, and you could spike through it, of course, but just generally speaking, longer term basis, I do think this is really the area that you want to focus on as far as support for gold. Okay, and 1182, it's also lows, horizontal levels, so that's also 2013, okay, in June, and 2013 December. All right, so you do have some solid price levels to work with in gold, right? And pretty fascinating. I had written some bearish gold stuff a while back. Bearish gold, bearish silver. When we were up here talking about the COT stuff, remember, in particular, and I got a lot of pushback on that from peeps. It was, gold's gonna go to $5,000. Blah 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 blah. Yeah, maybe it will eventually, but what if it goes down from 1,300 to 1180 first? All right, where was I doing? Here we go, COT. Check this out. This is gold. This is what you're looking at here is some COT stuff. Okay, so real quickly, you remember the record we had talked about, right? Well, that record's getting unwound pretty quickly. Okay, in fact, speculators sold the most amount of gold last week. In other words, this was forced selling because they're all long, all right? But they had to sell the most amount of gold. It's the biggest selling since April 2004, and that was right here. Okay, so you can see that a couple weeks after that huge selling back then, you actually did get a really big bottom. Market hasn't went, in a big bull trend after that. So, something quite similar could happen here. In fact, I want to see April 2004. Okay, so back then, that would have been like right here. Okay, so back then, at that point, that would have been a record too. Okay, and then it got wiped out. Obviously, this record was even crazier and bigger. But yeah, so I watch that 1180. Masanori has a question on the DAX. Sure thing. Let's take a look. So the DAX, which I have not looked at in quite a long time, but it's probably a good idea to look at it considering ECB's tomorrow. I feel like we've been at this resistance for, I don't know, like a million years. So this was, remember, the long-term chart. Okay, you just go back to 2009. Hold on. This one's a mess. All right. So here, it's a little cleaner. So if you just go back to 2009, right? You can see the, draw the your pitchfork, okay, from March 2009 to April 2011, September 2011 low, and that was support, and look at that. That we've been resistance just yesterday. All right, so that's another. I mean, finding resistance ahead of ECB, sure, you could spike up into this again, of course, but if you do get something on ECB, you know, where they come out and they disappoint or whatever, you know, people expect some bazooka or whatever, and they don't do it, what are you going to get? You're going to get the DAX basically falling off a cliff, and you're going to get Euro rallying, okay? So it is interesting that you do have the DAX up at resistance, okay, although not at a higher level that it was in April, and the Euro's doing the same thing. The Euro's at, you know, coming in on support at we're looking at what, 110.70, right? So kind of a similar story there. Yeah, it's crazy. I feel like we've been at this resistance line for some time. I mean, this is a big level. Okay, yeah, you went through it for a time in April, came back below. This is definitely not the right thing to pay attention to right here. Okay, but do have a three-wave rally here. You do have a five-wave drop, it looks like, in the DAX. You get a little pop higher. So I would watch on a very short-term basis, Mushner. I would watch this level for resistance, about 10,290, right up here. Okay. And also, again, short-term basis, I would watch about 10,120 for support. So your kind of short-term trading levels going into the next day or so be about 10,120 and 10,290. So yeah. This might be a good chart to actually add up to throw up on the updates tonight, because ECB's tomorrow. Oh, silver, yeah, sure thing. So silver, okay, getting pretty close to support on silver, actually. Let's go to a 4-hour chart. You can see this silver's riding this median line down. Okay. And the Andrews line that we have here, I think is pretty useful. I mean, you had resistance on the ML, you had support on it, and once it broke, it kind of really broke. So I'd be watching for support. I'd say probably around 15.6, currently 15.9. So 15.6 or so. This confluence area, basically this median line. All right, confluence of the median line and the lower parallel on, from this structure here. In fact, I actually think that I wrote a piece about silver a while ago on daily what was on Daily FX? No, it was on SB, but it was one of the free posts. Let's see here. Chart of the week, silver. This was back on April 23rd. And what did we talk about on this bad boy? Looking at support. Okay, so they're talking about there, looking at the 55-week average on that. And that 55-week average is actually a little lower. Two areas to watch for support, though. Basically, the 55-week average, which is, again, a little lower. It's in the 1520s, close to 1527. And then actually just right here, which is about 1560. Okay. Basically, you want to follow this. You're trading it, okay? draw this fork, okay? I mean, it's been precise as resistance, okay? And it's been pretty good for support too. Okay, so as you can see, you're just coming off this support. Now, be careful, because if silver drops below the median line, what you will have done at that point is actually drop below a level that's provided support for several times now, and the risk at that point is that you kind of go into really a washout. Okay, so don't be a hero trying to buy silver. If it's down below here, what you'd like to see is a rally and then kind of have it wedge into support, right? And find support on this level in conjunction with the support lines. Okay, because this is downtrend stuff right here. Okay, even then, you rally up into here, resistance, this is still resistance. Okay, until it's broken. Okay, so on that point, what you'd like to see is, let's say the market rally here, so you come in, okay, you come up in here, boom, now you break it, and then you'd be looking for support maybe on, I'm not saying this is going to happen, obviously, but what I'm saying is that's the kind of stuff that you would like to see. You'd like to see old support become resistance, and those are your behavior changes, right? It's really a it's really a progression, right? Buy it to support resistance, but in order to, for trend analysis, in order to understand the market behavior and how it's changing and everything like that, you'd like to see, those old resistances become support and support become resistance and vice versa. All right. Okay. All right. So I got to wrap it up here. Let me get this archive for you though, so it's up and ready to watch. And yeah, we'll get a feel out for June. Generally speaking, June is a negative month for the dollar. So, that spells good things for Aussie, I think, with the way it's acting at longer term support. Kiwi as well, even though we're kind of looking at both sides of that market, right? But, support 67.60, take it up back to 69. Dollar CAD, again, holding out for 33.20s, but if stopped out before then, it's 29.76 support. Break below there would actually probably turn bearish, although it's difficult for me to do considering that crude is looking like it wants to turn over. But Euro is probably my favorite at this point, just because the huge support at 110.70. Generally speaking, 110.50 to 111 has just been giant support going back. Support and resistance going back, January of 2015. So, and you got the trend line there, and you got the, big moving averages and everything else. So there's a lot going on for euro dollar down here at support with ECB tomorrow. Okay, so let's keep on our toes, right? Heading into ECB tomorrow, and euro, get ready to buy it into support. All right. Okay. Good luck. Take care.